Stocks deep in the red, though off the lows of the day. 57.0537, Carol, was where we opened. And that was the high of the day.
Yeah, pretty remarkable. I think what's interesting, though, over the last half an hour, though, we have seen stocks come off their worst levels. I think it's really interesting to see whether or not we continue to see buying into the close. We've just got about a minute or so to go, or whether we start to see another leg to the downside.
We should know not everything is down today. If you look at the S&P 500, there are 25 stocks in the S&P 500 today that are actually hitting 52-week highs. Verizon, one of those. Altria, another one of those. AbbVie is hitting a 52-week high today. So is IBM.
Yeah, so some defensive buying, but when it comes down to it, the number everyone's looking at is a 200-day moving average, or I should say the line, and everyone's talking about how nothing good happens below the 200-day moving average. We could be closing below that level, and if we close again below that level tomorrow, a lot of people saying that puts us in a new regime.
Yeah, well, it certainly looks like we are going to close below it here on this day. 57.34 is your 200-day moving average. The S&P right now at 56.07 and change, and we should also point out the index right now poised to actually close in oversold conditions for the first time in about a year and a half.
Yeah, pretty significant, right? Yeah. And, this is when you wonder, do buyers come in at this point, or do they kind of wait to see how it plays out over the rest of the week?
Yeah, hard to do that, of course, when you continue to hear this chatter out of Washington saying, look, folks in the White House, they don't care what the market's doing. They're playing the long game on the economy. It'll be interesting to see whether that actually comes to fruition. The closing bells in New York as people are obligated to chat and cheer, with the S&P down more than 150 points on the day, or roughly about 2.7%. The Dow Jones Industrial Average down almost 900 points, or 2% on the day. The NASDAQ Composite is going to close lower by 700 points, or about 4%. Similar move lower on the NASDAQ 100. And the Russell 2000 also being dragged down on the day, down 56 points, or 2.7%.
All right, quick check on the S&P 500. You had 341 names to the downside, guys, 162 to the upside, Scarlet.
And given that the S&P closed down about 2.7%, you would think that all 11 sectors are in the red. That's not the case. Utilities gaining more than 1%. Energy also holding up by about 1% as well. Of course, they're among the two smallest sectors in the S&P.
All right, let's get to some of the individual gainers, guys. Redfin, no surprise, up 67%, right? Rocket is buying Redfin, an all-stock deal, $1.75 billion is a price tag on that. Rocket paying $12.50 per Redfin share, so no surprise to see this one. Biggest intraday gain, probably biggest gain in total on record for that name. Another name actually gaining in today's section, Tractor Supply, at one point up 5%, but finishing the day with a gain of about 0.5%. Business Insider noting over the weekend that Mizuho analyst saying that faced with U.S. egg prices at record highs, shoppers are turning to Tractor Supply in large numbers to buy baby chickens of their own. So we did see a lift in that one. And Cracker Barrel, guys, up about 3.5%, being raised to a buy from hold over at Truist Securities, which views the company's solid results in the last 2 quarters as a sign that its turnaround plan is gaining traction. They upped the price target to 55 from 51, stock closing at 44 and change today.
All right, you got the gainers, Carol. I got the decliners. I do want to start with the shares of Tesla. Its worst day going all the way back to September of 2020. Shares falling by more than 15%, reaching their lowest level going back to October of last year. And yes, that was before the U.S. election. Shares dropping today by 15.4%. Growing concerns about the company's deliveries. Joseph Spack over at UBS cut projections for the first quarter and the full year, expecting a 16% reduction in deliveries this quarter and a 5% annual drop next year. You got to wonder if shareholders are going to start demanding that Elon Musk get back to Fremont, California, or maybe Austin, and work more on Tesla. We'll see if that happens. Hey, shares of Apple also selling off today. All members of the Mag 7, Apple no exception. Apple, worst day going back to September of 2022. Shares down by close to 5%. At one point, it was the worst day since 2020. Separately, Apple did say it was delaying an AI-related update to Siri for the foreseeable future. And then this afternoon, Mark Gurman out with a Bloomberg exclusive, citing people familiar that Apple is preparing a major software overhaul to transform the interface of the iPhone, the iPad, and the Mac. The idea is that it makes the OSs more consistent and will simplify navigation.
A lot of moves.
Yeah, go ahead.
Go ahead. Go ahead, Al.
I was going to say, just finally, shares at Novo Nordisk down by 9.4% today. Those are ADRs. Martin Lang, I saw him on your air, EVP for development. We should note that Novo shares fell after the company's next-gen shot failed to meet expectations in a trial. Patients did lose 13.7% of their weight over 68 weeks.
All right, let's get a quick check on yields here. There was a lot of activity there, particularly on the short end of the curve, down 10 basis points on your 2 and your 5 year. Of course, the 2 year most sensitive to conditions, to Fed conditions, I should say, or changes in Fed rates. You had an 8 basis point drop on the 10-year yield and about 5 on the 30-year yield. And speaking of Fed conditions here, we talk about this idea of what the Fed might do next, guys. I mean, we've all been sort of focused on work. We came in, just barely a month and a half ago, and you had a market that was pricing in barely a quarter point of cuts all year long. Right now, that is more than 3/4 of a percentage point now being priced into this market. To be specific, right now, 83 basis points by the end of the year. So a big turnaround just in the past 6 weeks in expectations for Fed cuts.
And yet the expectations for next week, when the Fed meets and puts out their latest views on monetary policy, they are not expected to cut rates. But it will be interesting. We get another read on inflation this week and whether or not it becomes trickier for the Fed, especially if we see or continue to see signs of slowing U.S. growth. And if inflation continues to be sticky, once again, we bring up, this idea of stagflation and how it makes it more difficult for the U.S. central bank.
Yeah, Michael McKenzie, who covers rates for Bloomberg News, was on our air a little earlier, and he said, obviously next week's meeting, not really seen as a live meeting, but investors kind of looking to signals that we get about what happens at the May meeting as a potential meeting for some rate movement.
I suppose the silver lining here is that a lot of people, economists, are anticipating CPI increases to slow for the month of February. Right now, we're looking at 2.9% year-over-year growth in consumer prices versus 3% in the month of January. And when it comes to University of Michigan consumer inflation expectations, that too is decelerating just a bit.
And what's interesting too about all this too is this idea, and we're speaking with Amy Wu Silverman at the top of our show, who was talking about this idea. A lot of this stuff hasn't actually shown up in the data yet. Gina Martin Adams echoed that, and that's going to be a big concern right now, is that there's all these fears out there, but at least as far as the hard data, not showing up just yet. Correct.
All right, let's get to Oracle, just coming out with its latest results. Third quarter adjusted operating margin, 44%. That's a little bit better than what the street was expecting, 43.6%. Adjusted revenue, $14.13 billion. That compares with an estimate of $14.39 billion. And third quarter adjusted EPS, guys, $1.47 a share. That's 2 pennies light. And you do see the stock down about 2/3% here in the after hours. All right, guys, that is a wrap. We'll continue to track some of that earnings after the close. That's a wrap on radio, TV, YouTube, and Bloomberg Originals. We will see you again, same time, same place tomorrow for the closing bell.